Hi guys. Today we will analyze McCormick & Company stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The short-term trend is positive, while the long-term trend is still neutral. It is advised to wait a little bit longer to see how this turns out. Strong support levels are around $81 and $78. Next strong support levels are around $71 and $60. Strong resistance levels are around $91 and $97. Next strong resistance level is around $105. In the last month the stock has been trading between $81 and $91 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.1 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 7% per year, for last 5 years. We see that the average profit margin of the stock has been around 13% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 99% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for McCormick Company: bad, average, and good. First scenario. McCormick will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 3%. Future profit margin would be low, 12%. Future free cash flow to net income rate would be low, 70%. In this case, the fair value of the stock today would be $53. Second scenario. McCormick will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 5%. Future profit margin would be average, 12.5%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $69. Third scenario. McCormick will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 7%. Future profit margin would be high, 13%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $87. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 2.53. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For McCormick & Company, analysts forecast growth rate around 7% per year in next 5 years, and future P/E around 30. Again, I will use 3 different scenarios for McCormick Company: bad, average, and good. First scenario. McCormick will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 3%. Future P/E would be low, 16. In this case, the fair value of the stock today would be $22. Second scenario. McCormick will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 5%. Future PE would be average, 20. In this case, the fair value of the stock today would be $33. Third scenario. McCormick will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 7%. Future PE would be high, 24. In this case, the fair value of the stock today would be $47. As you can see, today the stock is overvalued, $90, even if we expect the company's high performance in future. While the company has a good profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 5% yearly. Based on that, the stock looks overpriced at the moment. The company is a dividend aristocrat. I may consider buying the stock for the dividend, when the stock drops below $65. Company's strengths. McCormick Company Incorporated is an American food company that manufactures, markets, and distributes spices, seasoning mixes, and other flavoring products to retail outlets, food manufacturers, and food service businesses. Their products are available in many countries, and it is the largest producer of spices and related food products worldwide, based on revenue. The company has a wide economic moat stemming from its solid relationships with retailers. Over the past few years, McCormick has been diversifying its portfolio via various acquisitions, and expanding across new markets. While supply chain disruptions persist, McCormick is seeing improved service levels, relative to the start of the pandemic as its manufacturing operations have caught up, aiding its retail relationships. McCormick's sales trajectory could be bolstered, if consumers' penchant for at-home food consumption persists beyond the pandemic, as management suspects. The company is a dividend aristocrat. It has raised its dividend for impressive 36 consecutive years. The stock currently has 1.63% dividend yield. The company's return on assets of 5%, return on equity of 15% and profit margin of 12% are amongst the best returns of the industry. Risks. High inflation, supply chain challenges, and recent disruptions in China from COVID-related lockdowns, are all expected to weigh on margins this fiscal year. The shares trade at relatively high multiples and could be hurt by earnings disappointments, or decelerating growth. The company operates in a very competitive food industry, in which companies must fight for supermarket shelf space. Due to the global nature of its businesses and plans to expand internationally, McCormick could be negatively impacted by foreign exchange headwinds. The company has a high debt level, due to various acquisitions over the last several years. The company is not financially healthy enough, and could expect problems in meeting its short-term obligations. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 5 to 7% on average per year. The earnings per share is expected to grow by 7 to 10% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.